All right, today is technically Friday, May 16th. Currently doing this video from Tokyo, Japan. On a little bit of a vacation here, so doing a quick market update review of the commitment to trader data that just came out. So we're going to take a quick look at what I think is pretty interesting. Something that I sort of expected in the markets here is that we are still seeing speculators sell into the recent strength in the S&P, the NASDAQ, and the Russell. So you can actually see on these charts here. Get rid of my drawing tool. What you can see on the S&P here, we've got commercials still max long. We've got blue, which represents the large speculators, and keep in mind this is indexed on 0 to 100, 0 being max short, 100 being max long, the yellow being the retail traders, or sort of the small speculators we call them. In the S&P, we are still set up as a long, which is really crazy given the fact that we've had such a move up from the lows. I think we're up 24% right now. 23.5% move from the lows, and yet the speculators, the large speculators who are typically trend followers, have been selling into this move the entire time. That suggests to me at some point these guys are going to have to get long. They're trend followers. The trend is clearly moving up, and these guys are really going to get caught. If they continue to try to short into this and we continue to see strength, they're going to get short squeezed, and I can see us really blowing out to new all-time highs here on the S&P. And the same thing with the NASDAQ and the Russell. We've actually seen the data change as of this past week, where commercials have gotten longer in the NASDAQ. The large specs have gotten shorter, so they're selling into the strength. They're selling into the move up. And the small speculators, the retail traders, are actually near max short on the NASDAQ, given our based on our look back period. And that is also despite the move up of 30% from lows to highs here. And we're still off, I think, by about 5% from all-time highs. About 5% right there. So 5% to go to get back to all-time highs. Yeah, it's crazy. I think we're going to break through here. It might not go straight through, but we've had a pretty nice V recovery so far. And then same thing with the Russell. We have seen even more so here versus last week's report. The large speculators sold the move, small speculators sold the move, and the commercials got longer. So we right now, from low to high, are up 24% on the Russell, and we're still off by quite a bit from the highs here of about 16%. So really, I like the Russell a lot here as far as being set up. I mean, we've seen this V recovery. We've sort of taken out the Liberation Day, sell-off. I like the Russell. I like the small caps here. I think this is a really good opportunity from a risk to reward standpoint. We're still pretty well off the highs, and yet the tape is telling us to go long. Commercials are long, and the speculators are shorting into the strength. So I think this is an interesting setup. I'm going to tell you guys what I've been doing and what I've been up to here. So I'm going to close a couple of these charts. And what I've actually been doing is rotating out of the portfolio. So as we had that dramatic sell-off that we just talked about, when we hit from lows to highs, or from highs to lows, 20 to 25% drop, I was accumulating. I was buying S&P, I was buying NASDAQ, I was buying some levered positions, I was buying crypto, I was adding to different sort of speculative positions in the mid caps, the small caps, the large caps. So I've been buying here, and now what am I doing as we're getting back within 5% of all-time highs? I'm actually rotating out of some of the key positions here. So I want to talk you through a couple of the rotations that I've made, but first I'll give you kind of the holistic portfolio strategy. I had rotated completely out of TLT and out of GLD, so the 20-year bonds and gold index fund. I rotated out of both of those to buy stock when we were selling selling off at 20 to 25% discounts. And now what I'd like to do is start selling a lot of those positions as we're getting back to or near all-time highs. Depending on, I'm talking more so the index as a whole. Some of these stocks are still down and beaten up pretty good, the ones that I've gotten into, so I still have some positions, but my goal now is to rotate out and get back into some TLT and GLD exposure. Not an immediate thing I feel like I need to do now, but as we break back to all-time highs and to new highs, I would like to start adding more exposure to TLT and get back into gold, since those positions are very underweight for me right now, and I'm very heavily in stock indices and individual stock. So that's my overall strategy. The first thing is me accumulating some cash reserves again, which I am right about back to where I want to be with 5% holding some cash. And then the next thing is to get about a 5% portfolio add into TLT. I'll do that small accumulations over time. And then finally adding to the GLD position. I'm probably going to be a little bit heavier cash, not for any reason other than just selling and rebalancing the portfolio and then waiting to find new opportunities. That's the only reason my cash position is probably going to get above 5% here in the near term. I've got a number of things that are just slated to get sold at certain price targets, so I can just see that position getting a little bit bigger, and then I'll start to rotate it, like I said, to TLT, into gold. I've got some moving around to do into like Roth IRAs and stuff like that. Probably pay down a little bit of sort of some debts on my own personal kind of income statement here, but no specific reason other than, just rotating and balancing the portfolio and then getting back to a proper balance of bonds and some GLD or gold exposure. If you guys listen to some of my other videos, I talk through kind of my portfolio balance being predominantly NASDAQ, so 40% NASDAQ, about 35% in SPY. I've got some small exposure in international and emerging funds. I've got about 5% right now in crypto, about 5% in cash, 0% in bonds. And yeah, I mean, we're pretty heavy in stock right now. I'm actually, I think, a little bit more like 45-40 between NASDAQ and S&P. So yeah, I'm going to talk through, so what are the positions I've been sort of rotating out of and why. So first thing, I'm going to look at a couple of different stocks here. These were options plays that I had taken over the past couple of months. First one's Micron. I've been talking about Micron being a little bit too sold off in the semiconductor industry here. If I can just get this thing to drag. There we go. I've been really kind of swing trading this over the past couple of positions. I've been in and out of Micron a few times here. I've still got a core holding, or a small percentage of the portfolio is in Micron, but I had some options that I just took profits on. We were in at around a $60 to $70 price range, and then I'd gotten out right around 95 for my options play, which had, I think, yielded something like 150% gain. It was a small, I think, I don't know, $1,500, $2,000 profit. So that was Micron. Next one I want to talk through is NVIDIA. NVIDIA has been really great. Only half-size position for me here, but still actually really took off. I took 2 out of the 3 positions off the table. This thing was like a 500% gain. I still have one runner that's currently in more profit than the last 2 that I took. It's a $115 call. That was about a $3.90 purchase for me. That was the premium on the 115. We're currently trading at around $20 for those, so we're up something like 500% on that with the last position. I sold the others at around 130 to 135. So at the NVIDIA price. So I think those were trading at 15. So it went from about 3.9 to $15. So a good like 3 to 400% gain on those. So pretty nice position there. As far as profit taking on some stock, again, this is mostly just selling into strength and rebalancing the portfolio. I've taken position or profits on Uber, which had a nice break out of this kind of descending triangle. I've taken profits on Wayfair, which had quite a bit of a sell-off in the recent times, and then again more of a rebalancing of the position since I had accumulated a pretty decent size and wanted to just rebalance. So that's Wayfair. Next one is Coursera. Something I've been accumulating down sub $7 per share. We've had a nice little bit of a breakout. Price action and chart looks really healthy here with a nice little break of this falling wedge pattern. My next profit target is around 9.4, and then I'm going to hold the rest as a runner, which looks like it could even get back up to the top of the channel here at 11 and change. But Coursera, again, more of just balancing the portfolio, selling into strength. Same thing here for Lyft. Lyft had a really nice breakout on an earnings beat. Nice little gap up here. I took some profit around 15 and change. I'm planning on taking some more profit around 18, and then we'll probably just let the rest of it run. Next position is Coinbase. Just took some profit here as well. If you sort of do a tax loss harvest strategy or tax optimizer, then technically I was out at like a break even just to reduce some of the position size, and the rest of it is in a very healthy amount of profit. We've actually got an inverse head and shoulders that looks like it's getting a nice breakout to a price target of about 280. I took profit at 270, which was my price target. We just broke out and hit that today, so I'm happy there. Had a pretty sizable position here, about 20K in this portfolio, which to me is a little bit heavy, so that's why I reduced the position at 270. And then I took some positions off the table. One, which was just, bad timing before the gap up. I sold out of First Solar, which, you can't win them all. That was one that I sold before it broke out. Just didn't like where the stock was going. Moderna, same thing. I've dumped the position there. It was a small position just to rotate the cash. Devon Energy, same thing. Small profit on that. Not too much going on. And then TQQQ, the triple levered NASDAQ. Again, more of a rebalancing for me here. This was actually a small profit as well, so I took that off the table. Again, rotating into cash is my current priority to get to that 5%, which I am just about at right now in the portfolio. So at one point I was a little bit levered and buying that 20 to 25% dip, and now we are actually back to about 5% cash. I'm going to be buying some TLT and then gold as things sort of play out over time. And then I'm going to walk you through. So again, I just want to take a quick look at these charts here on the NASDAQ, and just between the past 2 weeks, I mean, look at this move for the blue candles. These guys, the large specs have sold into the strength. We've seen the NASDAQ just go straight up, and yet it's actually going down. These guys are selling into the strength. Really interesting tape. This really makes me think we got to be going long and staying long here. And same thing for the S&P. Look at the move on the large specs, just selling this thing, and commercials are buying it. So to me, you can't short it here. You'd be crazy to go short. And then as far as setups that we're looking at, so we're continuing to watch the NASDAQ, the S&P, and the Russell. We maintain our active position long in the S&P. I'm still watching gold, more of a momentum play. I'd like to get in on some futures positions to go long here if we can sell off a little bit further and then catch some momentum. Bitcoin, I actually took some profit on, but I'm considering getting back in. Position still looks really good and really healthy. Ethereum, I'm watching it from a momentum standpoint. Technically, there wasn't enough volume on the breakout for my momentum signal to actually trigger where I watch and actually enter it. So I'm just sort of letting that ride. I have some Ethereum in sort of the standard crypto holdings, and I'm actually pretty bullish. Ethereum up into a gap fill that I saw in the charts to about $3,200, then I would reduce. The yen, we're still short. We're looking at Swiss franc short. That's a setup position, or a fully set up position that I would like to get in on. Soybean meal, we are watching to go long. And then cocoa is actually set up to go short, which is interesting. Cocoa's trades in pretty large quantities, so that's going to be a tough one to really do anything with. But yeah, that's what we're looking at. We're maintaining our long S&P, where we are maintaining our short in the yen. I'm probably going to pick up some short in the Swiss, and then outside of that, I'm probably going to get back in on Bitcoin long, and then I'm probably going to consider getting long on the Russell as well with a small position and kind of a wider stop, because I really like how the tape's looking on the Russell, and I can see a lot more upside since it's still about 15% off the all-time highs. So yeah, this is what we're looking at. I've got more price targets I'm looking at. I've reduced a little bit of Tesla as well, and I'd like to get out a little bit more once we get to about a $400 price target. And then I've got just some general exposure there to reduce, because I've got such a compounded position in Tesla that's overweight in my portfolio. So that's just kind of trying to sell and optimize based on taxes. I'm looking to get out of that position, or at least about 20 to 30% more of that position over the next, call it 3 to 6 months. So that's kind of what I'm looking at here. Appreciate you guys listening, and we'll talk again likely next week or possibly the week after. Just depends with the vacation I'm on here. So thanks for listening, guys. Take care.